So welcome everybody to FX Street's webinar. Thanks for having me here, FX Street. Hi everybody, Steve Misic here from Online Trading Academy, one of the instructors from Online Trading Academy. You probably know Sam Seiden better than me. He's been here for years and years. He's been doing webinars for you nice folks for years and years. So I'm doing these webinars alongside Sam, talking about currencies and the currencies markets, in particular the dollar versus the Japanese yen pair that we've been covering for the last 7 months. And the archive should be out there if anybody wants to go back and watch them. It's just basically using what we teach our students to use when they trade, which is something we call our core strategy. And I do this blog for Online Trading Academy. This is the actual blog itself right here. It's an area of the website called our Power Trading Nation. It's a social media area of the website where our students can go and access other students. They have a trader exchange here where students can actually go and exchange trading ideas. They actually have forums here where students can talk and ask questions, instructor forums, student forums, India forum for those students there. They actually have an area here where they can listen to the Power Trading Radio broadcast every time they want. All right, so this is the Power Trading Radio broadcast from June 27th. All right, and they also have other trader tools here, and they share trades with each other. Okay, the Pro Trader blog section here. A couple of years ago, when Online Trading Academy asked instructors to be involved, I decided that I would do this, and I would do a blog every week, which I've been doing now for better than 2 years. It's the weekly market cycle review. It covers 7 different assets, including the large cap stocks in the USA, the Indian Nifty 50 for all the students that I was with in India a couple of years ago, the bond market for the USA, the wheat market for the USA, which just had a really, really big grain report. Pretty sure it moved a lot. A stock called Apple Computer, and the dollar versus the Japanese yen. And I just wanted to point out, this is as of last Wednesday, the dollar versus the Japanese yen, as you can see, is sideways on the daily chart and has been sideways for a while. I also throw in the Nikkei 225 stock index, which is Japanese stocks. And Japanese stocks generally will go up in value when our stock market goes up in value. People like to put money into assets like stocks when they feel as though taking risk is prudent. And of course, those assets will go down in value whenever the market feels as though they're overvalued or extended. So notice here, this is one of the very few times I wanted to point out where our dollar versus the Japanese yen was actually testing what we call demand or support. Demand is different from support in that demand is an area where we believe institutions have unfilled orders to buy. And as you can see, the price of the dollar versus the yen tested this area for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days as of last Wednesday. While at the same time, the Nikkei 225 was trying to push its way past an area of supply. Now, this is one of the few times where the dollar index against the Japanese yen was not going up at the same time that the Nikkei 225 was going up. So just wanted to point that out. There's a little bit of a divergence between the movement in the dollar versus the yen and the Japanese stock market for the first time in a long, long time. Okay. And the last asset I cover for our students is our small cap stock market, the Russell 2000. So every week now, I should say every month now, So this was a picture, once again, the chart you're looking at here, as of December 31st last year, as the dollar versus the Japanese yen made the high for the year. And this entire time that it's been rallying, it's been taking out levels of supply on the left side of the chart. But it had a hard time getting through 105. And that's kind of where the market stalled in the dollar versus the yen last year. So what happened then was a daily level of demand forms below current price between 104.27 and 103.76. Actually, several did. And I believe we looked at these charts and we managed to push all the way through to where we noticed that these areas of demand bounced current price higher for a little bit. And if I'm not mistaken, what ended up happening was the first area of demand actually bounced us higher several times. And the Nikkei came into a demand level at the same time, which is that correlation that I had noticed where they kind of moved together. And what happened next was the dollar rallied one more time back up to the highs of the year. And then it began to retest this area of demand below current price once again. And that actually happened during a non-farm payroll report, which happens here in the States every month. We'll have one this Thursday because of the 4th of July holiday in the States. And the market actually retested the highs of the year and then came down and pushed through that first area of demand, started to show some weakness. And a couple of days or so later, we actually came down to the next lower area of demand. All right. So now Sandy's asking about the charts. Hopefully you guys, I'm still sharing, you should be seeing the charts that are dated 1/15/14. Let's go. All right. Excellent. Okay. Now we bounced off of this area. In the meantime now, the Nikkei is starting to show some weakness also. It managed to rally to a high of 16,450, which was at one point last year about 70%, a 70% rally from the lows to the highs last year. And now the Nikkei is also testing this area of demand, which was around 15,450. So we've already fallen 100 points at this point. Actually 1,000 points at this point, which is a pretty big drop in a very short period of time. It happens quite a bit where the Nikkei has some wild swings. And when it does, the dollar will have some halfway wild swings also. So now the dollar is bouncing off of little tiny pockets of demand, and every time there's a rally up, the sellers are selling near the prior highs of the year, and every time there's a push lower, they're buying. So we're very much range bound already by the end of January last year. And then all of a sudden, for some reason, in the last week of January, we pushed through this second area of demand, and we begin falling. And mostly when that kind of stuff happens, I'll usually put a note or two on my charts. On 124.14, we actually had a currency crisis in emerging market currencies, which led to yen short covering. Okay, so the currency markets won't generally go by themselves in different directions. Generally, if there's a crisis, people will cover short positions in the Japanese yen, and they'll also plow their money into the safety of the U.S. bond market, which means that they'll have to convert their currencies into dollars in order to do that. So we broke through that second area of demand, and we're starting to drop now down to an area of demand between 101.686, which we had tested already once in December on the way up. So when that happens, we begin to worry if there's going to still be willing buyers at that price level. And no problem. Came right down to the level a few days later. And once again, turned higher. At the same time, the weekly chart of the Japanese yen dollar began to form a brand new supply level overhead. And that's kind of typical too. Whenever the markets rally up and then they'll base for a few weeks and then they drop from that level, it indicates that at that area, there's still willing sellers, there's still institutional sell orders. And now, before we can make a new high in this pair, which we haven't done now since the end of December last year, we're going to have to take out this weekly area of supply. And at this point, we really don't have any weekly demand until we get back down closer to 99. So the dollar will bounce against the Japanese yen off this daily demand level. And at the same time, the Nikkei was also falling. And when the dollar did bounce up until just recently, occasionally what would happen is the dollar would bounce and the Nikkei would turn at the same time. And in this case, price had pushed through a demand level and was beginning to drop. And then all of a sudden, because the dollar caught a little bit of a rally, the Nikkei turned around, rallied with it. And as we look at our monthly chart, once again, still haven't made any new highs. We're still up 39.53% from the lows of 2011, okay, since this last bear market rally. And now we're coming up into the last part of January, and on the weekly chart, we definitely now have weekly supply between 104.02 and 105.41, which is a very big level of supply, and we don't really have any demand at this point until around 98.50. Okay, so what we would need to see happen now for the markets to stabilize is we'd actually have to build new demand levels close to where current price is. Otherwise, we run the risk of breaking through this area at 101.68. And if we go below 101.13, we open the way up to a drop down to 100.23. Now, 100.23 is fresh demand. It's an area of daily demand that had not yet been visited by current price. And as it turns out right now, it still is 6 months later, it still is an area that has not yet been visited by current price. So for some reason, anytime there's weakness in the dollar versus the yen, there seems to be buyers at around the 101 area. And anytime there's any kind of strength in the pair, there seems to be sellers at around the 104 area. And from here, folks, this is where this pair, on almost every time frame, begins a very, very long sideways pattern. Notice that our Nikkei 225 now has fallen all the way from 16,450 to around 14,460. So the Nikkei is still weak at the end of January of this year. And the Nikkei on the daily chart also is falling towards areas of demand at around 14,433. Now notice I've already fallen from this area at 14,975. So that means this looks to be the range that we'll see this Nikkei trade in until either the demand levels go away and we'll test lower demand levels, or the Nikkei comes up and takes out the supply level above 15,245. But remember, this is the end of January, and today is the last day of June, and both markets, both the dollar versus the Japanese yen, are very, very much for the last 4 months, 5 months almost, sideways inside the same trading ranges that they had been in for the last 5 to 6 months. And it, again, is not unusual. There's times where these currency pairs will go flat. And, of course, trend traders will look to trade other currency pairs. There are other currencies that trade against the Japanese yen that have a little bit more excitement, such as the Aussie yen, the pound yen, and even the euro yen. But For my students at Online Trading Academy, I always wanted to stick with the same asset, as boring as it gets sometimes. Um, so I switched a few things up. I threw a Fibonacci chart on here, and the Fibonacci supply level that I was looking at actually lined up with a 38.2% supply Fibonacci supply level. If you connect the highs of last year to the lows of this year at this point, and what generally will happen is anybody that is a Fibonacci trader, if they're bearish, they'll sell rallies to the Fibonacci's above current price, and the first one being the 38. And if that level went away, then of course people would sell rallies to the 50%, the 62% after that. Okay, so um, sometimes the supply levels that line up in the currency markets, they could be caused by institutions that are using Fibonacci analysis in their trading. In the meantime, we have the Nikkei 225 coming down to the round number 14,000 and actually testing 14,000. And that ended up being a 15.23% retracement from the highs of the beginning of the year to the lows of the year at that point in the first week of February. And the Nikkei weekly chart, we actually had a pretty decent sized level of demand at around 13,913. So right below that figure, right below that 14,000 number, we did have an area where prices rallied pretty strongly in September of 2013. So that's the next place where the institutions are looking to buy on weakness. And they got their chance that week. And the candle actually turns into a very bullish reversal candle, which most candlestick traders would notice, and they'd be interested in buying after that candlestick. So on our daily chart of the Nikkei, you see where prices rally up strongly from the 14,270 level, creating a new trading range between 14,270 and 14,975. So about a 700-point trading range forms on the Nikkei at this point in time. And coincidentally, the same type of trading range forms in the dollar versus the Japanese yen pair. Difference is the distance between the demand level and the supply level are not even 100 points apart, not even 100 pips apart. Okay. And I just saw on TV where the Nikkei is still down 6% this year, with the S&P 500 up 6%. The Euro Stoxx 600 up 4%, and the big standout winner for the year is the Sensex in India, up 20% year to date. All right, so now we're going to watch these two markets just kind of go sideways between these levels of demand and supply all through the month of February. And the Nikkei does the same and comes up to the supply level, falls away from the supply level, coming back down to the demand level. Same thing, the dollar versus the Japanese yen. Now we're in the second week of February. Okay. And the Nikkei comes down to the demand level, bounces out of the demand level, and the dollar comes down to the demand level and bounces out of their demand level too. Remember, these things are on top of each other. They're very, very close. Nothing really different on the monthly chart, still stuck in that same range. Weekly charts kind of going sideways now for 3 weeks in a row, alternating between very bearish weeks and very bullish weeks as price is testing the daily demand levels below. Okay. Nikkei having a little bit of a sell-off the following week after the bullish reversal candle. And then the Nikkei comes down to the daily demand level at 14,270 after hitting the daily supply level at 14,975. So we've managed to go up 700 points, and we've retraced the 700 points at this point. And what happens from here, of course, is One more time, another little bounce for these currencies as they begin to bounce off of the demand and the supply levels back and forth. So here we have our dollar on 219. It's gone down to demand, back up to supply. And at the same time, I believe our Nikkei 225 is likewise starting to rally on the weekly chart and beginning to rally once again back up 700 points to the daily supply level. And a week or so later, still inside the same range. And as the end of February happens, status quo. We've got both the dollar inside that range, back and forth, and we've got the Nikkei. Now, the Nikkei's come down to the demand level on this daily chart twice and rallied almost all the way back in the same day. So those reversal candles are pretty exciting for traders. And now we can see on our weekly chart at the end of February, 1, 2, 3, 4, 5 weeks of a trading range between about 102.82 and 100.74. Okay. So not making very much progress, but that's again because we rally every week up to the supply level. And later on from that supply level, usually a few days later, we begin to fall once again to retest the area where the institutions have buy orders. And on my small time frame charts, the 60-minute charts, same thing. Very, very small trading range. Starting to get some higher lows, though, which is kind of like a sign that the selling on rallies is being met with buyers at higher prices. And generally, that'll usually resolve itself to a move through the supply levels to the upside. And we start to move away from the weekly chart on the Nikkei. We're starting to have a rally where we're actually above the highs of the previous 2 weeks, which again looks bullish. And the next day on the 26th, candle still looking bullish. On the daily chart, we are once again testing that supply level with higher lows again every week, which is a sign that the Nikkei is actually absorbing the supply for a potential rally higher. And I say potential rally higher because I've seen this movie a few times. We start the rally through. Everybody gets excited. And then for some reason, the following week, we run out of buyers. We still have sellers. And the Nikkei begins to fall once again from the level. And as the Nikkei falls, the dollar yen also falls. And so we managed to push almost 3/4 of the way through the supply level on our second and third visit. Now we're pushing back into our demand level. From here, at the very end of February, still very much in a sideways channel. We've taken out a demand level between 101.80 and 101.66. And we've created new supply between 102.13 and 102.20. So levels of supply are forming above current price, and levels of demand at this point are being taken out as prices going lower each and every time we drop. So our monthly chart still looks the same. Haven't made new highs, haven't made new lows. Our weekly chart still looks the same, trading in the same trading range, 102.82 to 100.74. Our daily chart, we're starting now to push through the demand level. We've been in the supply level for several weeks, can't get through. And of course, if we take the demand level out, we'll once again drop to the lower areas of demand below current price. That's what it's looking like it wants to do in the first week of March. As for the Nikkei, the rally that started in the previous few weeks has stalled. We're beginning to fall. And on the daily chart, of course, it's because we ran into the same level of supply where we failed now for the last month and going on 2 months now. And of course, the news at the time, one nice thing about the blog is, I mean, there's headlines as to what's happening in the news. There has to be news all the time driving markets higher and lower. But whatever the news is, as you can see, now we have 1, 2, 3, 4, 5. This is 6 weeks of range bound trading between 174 on the bottom, 102.82 on the top. And now we are in to the first week of March. And then we have a strong rally back out of that demand level. We have a rally for the dollar versus the Japanese yen pretty much on every chart. And as we do, we also have a little rally once again for the Nikkei. And of course, the Nikkei runs into the daily supply level for the 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. This is about 11 times into the level. And now price begins to look as though it wants to rally through and move on and go and make new highs. And this is the same picture for the dollar versus the yen. Obviously, if we take out all the supply at this price level, if we fill all the unfilled sell orders and we still have willing buyers, then you'll definitely see a rally through the level. And of course, then the price will go up to the next area where you have unfilled sell orders at 104.28. Okay. So the dollar manages to rally as high as 102.60. And when it gets to 102.60, the Nikkei also looks as though it wants to push higher and retest this first area of supply at around 15,779. And on the daily chart, the Nikkei also very bullish. It's got a candle that's almost all the way through the supply level, indicating that anybody that wanted to sell at that price level has probably gotten their orders filled. And then the Nikkei pokes through the supply level. It actually creates a tiny little area of demand between 14,870 and 14,955. So there's actually a little tiny pocket of demand here. And it really looks like the following week now, we're in the second week of March, really looks like the markets are poised for a little rally. And of course, the dollar is working its way towards the supply level near 104. It's managed to push through this first supply level. And likewise, it makes a little tiny demand level at around 102.220. On the 60-minute chart, price actually pushes through a demand level between 102.96 and 102.83. And a new supply level actually forms between 103.24 and 103.41. So everything that was bullish just a simple day or so before becomes pretty bearish in a hurry. And of course, fundamentally, the situations that we've had in Ukraine, the situations that we've had in other parts of the world are always going to affect these currencies. And now we have a little bit of selling in the Nikkei. We also have a little bit of selling in the middle of the month in March on the dollar. And we come back towards our demand levels in both of them. And at this point, on 3/12/14, we have a strong drop. As a matter of fact, we had a rally up to a supply level at 102.71, followed by a strong drop that actually drops us all the way back down into the 101s. And we bottom in an area of demand at around 101.65. So even though we managed to rally a slight bit higher above the prior supply levels, now we're starting to get some bearish action in both the Nikkei and in the dollar versus the yen. And a new level of supply forms between 15,235, 15,435 on the daily chart of the Nikkei on 3/12. And this is what the chart looks like on the weekly chart of the dollar yen. Looking like we want to break out and make new lows. Then on 319, we come all the way back down to the old demand level. We had just poked our heads through the old supply level, fallen again, and created actually a new supply level between 103,004 and 103,754. We're back down in this old demand level, which we've been in 4 times. And usually when that happens, the same result usually happens. We eventually take out that demand and we begin to move lower. And this time we only move as low as 101.26, and we begin to rally again from these new lows. Same thing with the Nikkei. And Nikkei has a push into the demand level between 14,270 and 14,010. And now we spend 1, 2, 3, 4 days in the level. Now we've already tested this level, remember, in February. And now we're back in here in March. And of course, if we rally from here, we've got new supply levels overhead, and we actually do have a rally. We have a rally for the dollar versus the yen on 321. And there's a statement by the Federal Reserve in the U.S. that drives the dollar higher. Well, that was the time when Janet Yellen kind of hinted that interest rates would go up a little sooner than everybody expected. But we believe that, it's just an excuse for the institutions to get prices to an area at 102.60 where they had unfilled sell orders. And of course, a few days later, the dollar is falling again. Right? That's basically what news does. It drives prices to where institutions have unfilled sell orders and unfilled buy orders. And as you can see, as we're coming up into the end of February, I'm the end of March now, the bad news that comes out drives the dollar down into demand, and the good news that comes out about the economy in the U.S. drives it up into supply. And throughout the entire month of February and the entire month of March, we've gone pretty much nowhere. And the same thing with the smaller time frame charts for the Nikkei 225. It's pretty much in the same range. Finds buyers in this weekly demand level, just below 14,000. And every time there's a bounce up, they're selling the bounces. Okay. So we are now just about to finish the month of March where we started it inside a trading range. Now we've extended the top of the trading range above 102.80. We managed to get almost all the way to 104. And so far, we've only just tested the bottom of the trading range and snapped right back inside. And pretty much it's because that daily demand level managed to hold for the entire month of February and the entire month of March. And as we began April, the month of April, we still had the same areas of demand below price that keeps bouncing us higher. Same thing with the Nikkei. Okay. And Nikkei 225 daily chart, after spending 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days in that demand level and not exhausting all the buyers, we start to rally away from it. And now we're heading back towards the 15,235 supply level. Now, this is Nikkei rallying. And while the Nikkei rallies, usually the dollar goes with it. So the dollar's rallying as the Nikkei rallies. And then the dollar on 330 actually hits this first area of supply on this daily candle. And from there, we actually have a little bit of a push higher into that supply level. And same with the Nikkei, still rallying very strongly at this point. And the Nikkei is getting closer and closer to hitting the supply level at 15,235. So as April begins, the monthly chart, same picture, no new highs, nothing's changed. Can't seem to make any progress above 104 at this point. We're going to test 104 right here in the first week of April. on the weekly chart. And that daily chart shows that we're actually pushing through this supply level between 103 and 103.75. And we're beginning to move a little bit closer to that 104 level. While the Nikkei, the first day of April, starting to rally back, actually creating new demand levels on the weekly chart below current price. So the second day of April, we hit the supply level at 104 on the highs of that day. Okay. And we also are starting to sell off a tiny little bit on the daily chart as we hit the weekly level. And on this chart, 60-minute chart, we actually begin to fall from this 103.88 level, 103.92. And when we do that, that's kind of a sign that the sellers are stepping up. And the next sign that the sellers are stepping up is we rally back up to that supply level on one of these hourly candles, and we begin to fall from the level, giving anybody that wants a chance to be bearish and shorting the dollar versus the yen a fairly low risk opportunity to do so. The next day, we actually fall down to this first demand level between 103.60. And our Nikkei so far is hanging in there. It hasn't really fallen with the dollar. But we are getting closer to that supply level on the daily chart at 152.35. And we're beginning to see some sellers up in that area too. So the following week, the week of the 7th of April, we start to drop from the weekly supply level. And as we drop, we actually take out all of the 60-minute demand levels below current price, and we're headed for an area of demand which has formed on top of our older area of demand. So now we have demand from 102.17 down to 101.19. So almost a 100 pip demand level, and it's fairly big. But at the same time, this is typical of what happens when orders to buy or sell kind of bunch up in the same area. So now on the 60-minute charts that you're seeing here, we're headed for an area of demand between 102.36 and 102.27. At the same time, our Nikkei has started to fall out of a weekly supply level. And this is kind of important, that level of supply formed within the last few weeks of March trading. And we came back into that level right away in April. And we were testing shortly thereafter the demand level that formed at around 14,250. So this is what the pictures look like on a daily chart. Again, same picture of a demand level with another demand level below it. And we did hit that 15,235 supply level on 2 daily candles, and we fell pretty good from that level after that. So the range-bound trading that we've seen, and we'll try to get through the end of April before we sign off today so that we can pick up with May and our next webinar and finish it with May and June. So the dollar comes down to the demand levels between 102.17 and 101.19 and begins to bounce a little bit away from the levels. The Nikkei comes very close to that demand level at the same time and hits the daily demand level. It begins to bounce a little bit on these 2 days, around 4.9. And now you can see that our weekly chart of the dollar versus the yen is extremely bearish, very, very bearish looking chart, as is our daily chart. But we seem to be, once again, finding buyers every time we have even a hint of weakness in this area at around 102. And we come flying out of that area at 102. The Nikkei hits its demand level on the weekly chart. And as we go through April here, both of them begin to bounce once again. So whatever the news is, it's still enough to keep us inside the same trading ranges. Okay. So here we are on 412. We're rising from our demand levels on the dollar. And the 60-minute chart's bouncing a little bit off our demand levels. The Nikkei's right into its demand level on the weekly chart, the week of 412. And the dollar and the Nikkei are both testing the lower demand levels at this point, which is kind of bearish at this point, it looks like anyway. But then the dollar starts to rally on 415 out of that daily demand level. And the Nikkei turns and rallies with it. And on the weekly chart, we're rallying just a little bit higher. And now on the 16th, we're rallying pretty strongly from the levels, along with the Nikkei. And when we get to 416, the Nikkei actually hits a daily supply level, 14,423, 14,599. So remember, this is kind of the pattern for the last 2-3 months. Down to demand, up to supply. And on the 18th, we are hitting a supply level for the dollar at 102.55. The Nikkei is still rallying back towards the supply level on the 18th. Nikkei is trying to push through the daily supply level on the 18th. The dollar is still pushing higher, very slowly though, slow rallies. And as we get to 423, we see that the rallies have slowed. The candles are getting smaller on both markets. And the Nikkei is actually very close to that weekly supply level. Nikkei is almost through the daily demand level, but it's having a hard time. And as we come up on the very, very last week of April, where we're going to leave this, notice how the dollar rallies up, falls back. So it's not really strongly rallying. Neither is the Nikkei. But then we get some economic data around the end of April, and the dollar begins to once again rally higher, begins to drag the Nikkei with it, and the Nikkei manages to finish out the month of April along with the dollar in, once again, extremely narrow trading ranges. Every rally is being sold and every sell-off is being bought. So as we get to the end of April, the last chart here, the daily chart, we're just pretty much stuck between that 15,235 supply level and the 13,945 demand. So we'll pick it up here next month for one last time. We'll start with the beginning of May 1st, and we'll catch up to the present. Okay? So hopefully that very boring trading range for both the dollar and the Nikkei, the dollar versus the Japanese yen and the Nikkei. But that's the way trading is sometimes. Sometimes it's exciting. Sometimes it's what you see here. All right? So we will see you again, folks. Thank you for your attending today. Have yourselves a great rest of the day. And look forward to seeing you next time. All right? Take care, everybody. And have a good day.